Welcome back, ladies and gentlemen, to the end game. We are now in the point of society that we've talked about for a long period of time. It's coming, it's coming, it's coming, and now it's here. And it's being manifest as what we're calling the banking crisis. So, just to give you a bit of an overview, in the history talk, we spoke about how the world goes through these shifts every once in a while. About every 80 to 85 years, there's a turning over of the old system, a collapsing, so to say, of the old system, and the creation of a new world order, a new system, a new way for the world to organize. We are right now going through that phase, which is known as the fourth turning. If you want to learn about it, follow the book called The Fourth Turning. It really defines this in detail. If you notice, all the old ways of doing things are breaking down around us. Countries are breaking apart. Up until now, we've used all the countries have used the US dollar as their global reserve currency to do their transactions. Whereas now, the Saudis have decided that they want to go use the Enbridge currency. And the Russians are transacting in yuan with China. And Indians are transacting with yuan with China as well. There's 69 countries that are ready to go bankrupt this year or the year after. There is a breakdown of the way society functions, especially after COVID. All of a sudden, the world was put on hold, and now a new way of doing things has come along. My point is, we're going through that shift, and this banking crisis is one of the most pivotal moments in that process. Because in order for you to change how society works, you have to change how the money works. In order for you to change the power structure of society, you have to change the power structure of who owns the money. So let's look at who's owned the money up until now. In 1945, in 1944 technically, the Bretton Woods Agreement made it so that all the world's currencies were based on the US dollar. And the US dollar was based on gold. Now we're going to shift over to a brand new system, which is still unclear as to how it's going to be based. But from what we can see now, it looks like the new system is going to be a system where the US hegemony uses the US dollar as their global reserve currency. The Chinese people and the friends of China, let's say, the countries that are friends of China will use the yuan. Some of the Middle Eastern countries will use the Enbridge currency. The South American countries want to create their own currency. In that whole process happening, the banks that are currently over leveraged in the US dollar are going to have this collapsing process that we're going through right now. So before we get into the banks collapsing, let's just look at what was required for this process to happen. Because you can't build the new system without building the framework of the new system. So two really important things have happened very recently, or about to happen very recently. On March 20th of 2023, the ISO 20022 financial messaging language went live. It had been implemented in some places in some degree, but officially went live as of March 20. That new messaging standard creates a new way for the financial system to interact. It's effectively a way to automate the money that flows around the world. It automatically reports, automatically taxes, automatically confiscates, automatically allows all of these functionalities to be turned into smart contracts. And that's the framework of the banking system. It's basically the language that the banks use to talk to each other to send money. That went live as of March 20th, and the implementation is going to complete by November of 2025. So between now and then, that new financial system is going to be implemented, and it's going to use this messaging standard as its base. In July of 2023, coming up, FedNow is launching. So the Federal Reserve is launching a instant 24/7 transaction system called FedNow. Okay, and this system is going to allow the US dollar to move at all times directly from the Fed to companies, to banks, to institutions. Basically, it is the framework required for them to create the central bank digital currency that's coming out. And we'll talk about that in a second. The reason why I'm telling you these things is now that those things are live, we are in perfect timing watching the collapse of the banks because the old banks need to die and a new framework of how the banks are structured needs to come alive. So that's what you've probably heard about in recent time. Before we go into the banking collapse of today, I wanted us to look at the banking collapse of 2019, because nobody even realizes there was a banking collapse in 2019, but there was, okay? The Federal Reserve raised rates until 2019, okay? And the higher the rates go, the more expensive it gets for banks and businesses to borrow, so they start to have more and more trouble running their business. September of 2019, the banking system froze. Okay, these timelines are very, very important. So Fed raised rates in 2019 until 2019. In September of 2019, the banking system froze, and the Federal Reserve started pumping $50 billion a day into the banking system to prop it up. Okay, and by February of 2020, they were putting $1 trillion a night into the banking system just to keep it from collapsing. And then conveniently, March of 2020, we have COVID, and they had the excuse to print $11 trillion and pump it into the system to keep it running even further. And then all the assets went off on a run and the banking system didn't collapse. At that point, when COVID happened, they cut their interest rates to zero. We're back to happy times. Liquidity comes into the markets, money comes into the markets, everybody goes back to business as usual, right? In that process, what banks and everybody, all the businesses, everybody started to do is borrow money at this interest rate of zero, basically free money. And they borrowed so much money that there was too much money in the system itself. So then, when you think about banks getting money, you ever think about like, what do banks do with money, right? Most people think that banks just take the money and put it into an account and then magically give it back to you when you want it. No, banks are some of the most profitable businesses in the world because they take that money and they lend it out to others. In reality, they actually take that money and lend out way more money. Usually for each dollar, they lend out $10, but let's just, for simplicity's sake, they take your money from the bank account, they lend it out to borrowers from the bank, to investment portfolios and bonds and other places, but we're just going to look at those right now. They basically lend it out and say, here's a bunch of money, and they earn a return on that money, and that's why they give you some measly 0.1% return while they make a 4, 5, 10% return wherever it's invested. So the banks don't have that money. We give the banks money, they invest it somewhere else. When we want our money back, they usually have enough liquidity on hand to pay back the normal transaction levels of people. If too many people ask for that money back, they have to go and sell those investment assets that they have and give you your money back, okay? Bonds have been the safest place for banks to keep money because a bond is a guarantee from either a government or a corporation to pay you back. In this case, they put that money into government bonds, and that's usually the safest place to keep it because bonds have been the most stable. They're not as risky as stocks. They don't fluctuate as much. Now, in recent times, the Federal Reserve went and raised their rates exponentially. They basically, not exponentially, but they raised their rates faster than they've ever raised. What that did is that as the rates go up, bond prices go down. And so when people went to Silicon Valley Bank and wanted their money back, Silicon Valley Bank has to go and sell those bonds and give people's money back. But now their bond prices have gone down, so their bonds are worth a lot less. So effectively, they don't have enough bonds to pay everybody's money back. So Silicon Valley Bank was holding the money of Silicon Valley. And the Silicon Valley entrepreneurs are smart people. So they figured out that this is happening and that they don't have enough money to pay back how much money they owe these investors or these depositors. Now, those depositors are some of the biggest and smallest, basically the most amount of startups that exist in Silicon Valley. So if Silicon Valley Bank couldn't pay it back, most of those startups would shut down, and all of the people working at the startups would not be able to get paid back, which means we just have a complete freeze of the economy, right? So Peter Thiel, who's a legendary investor, warned everybody and said, get your money out of the bank. Everybody rushed in to get their money out of the bank. Within 48 hours, 40-something billion dollars was pulled out from Silicon Valley Bank, which effectively left them bankrupt. Okay, that's the process of what happened with Silicon Valley Bank. What was interesting was the Federal Reserve came in and created a brand new facility. They said, we will create this new facility where we will print money and give it to Silicon Valley Bank to make sure that they don't collapse. Normally, those depositors would have lost their money. The Federal Reserve printed a bunch of money and said, effectively, we will take those bonds off of Silicon Valley Bank and give them back the value of those bonds, the 100% purchasing price of those bonds. So effectively, they get all their money back. That's a very interesting move, because that means any bank that goes insolvent that they want to save, they could just use that facility to save. Okay. Now, that piece is interesting. That's the one everybody's watching. But remember, you got to understand the financial system like a magic trick. If they're getting you to watch Silicon Valley Bank, and it's all in the news, that means there's something else going on that you should be watching, which they're not showing you. And in this situation, what happened is they created a new facility to print money and steal it from our future generations and give it to a bank that had made bad bets. Okay. Even more importantly, the other two banks that facility provides funding to, or allowed to have that the usage of that facility provided to, was Silvergate Bank and Signature Bank. Okay. This is where it gets interesting. These were the only two banks that were working with crypto, because most banks haven't worked with crypto, and crypto requires 24/7 transactions to happen because crypto is 24/7. Banks are not 24/7, right? So Silvergate Bank is the one that was holding $3.3 billion of USDC reserves, Circle reserves, okay? Silvergate Bank also had its own transaction network called the SEN network, SEN network, which was a 24/7 transaction network for the US dollar, because they were working with crypto. Now, 90% of their deposits were crypto deposits for Silvergate Bank. That SEN network was actually a competitor for the FedNow network that we just spoke about, which is the Federal Reserve's facility to be able to transact all the time, right? The FTX collapse hit Silvergate Bank hard because they had a lot of exposure to it. All of crypto fell off of a cliff. So because they had so many deposits, they also went bankrupt. So Silvergate Bank goes bankrupt. They're holding $3.3 billion of reserves for Circle, which is USDC's parent company. That news gets released. People panic. They start selling their USDC. USDC depegs. So depegging means that it broke below $1 and it became worth less than $1, which is not good for a stablecoin because it's not stable, right? Now, USDC, according to my opinion, is the private central bank digital currency of the US, effectively. The Federal Reserve put Silvergate Bank on that list of companies or banks that it would actually protect because it's backing USDC. Okay, up until now, we've been waiting to see, okay, where could I move my money and know that it's safe, or as safe as it could be in this process of the banks collapsing and countries collapsing and so on and so forth. When the Federal Reserve came in and saved Silvergate Bank's depositors, I think they were saving USDC from collapsing, okay? That gives me confidence that USDC is connected to Coinbase, connected to BlackRock, is now connected to the Fed effectively, and has the who's who of the people who run the world as part of the organization. So I think USDC is now the safest place to keep money. Because what happened is, as soon as the Federal Reserve said that they would back up deposits, USDC went back to being exactly $1 again. It depegged and it came back. Luna, when it depegged, it went to zero. USDT, which is a scam, when it depegs, it has issues. USDC depegged and went right back, and the trust was restored again. Now, that's Silicon Valley Bank being backed up because Silicon Valley was in there. Makes sense. Silvergate Bank being backed up by the Fed because USDC was in there. That makes sense. But the interesting one is Signature Bank. So Signature Bank was another bank. It was the only other bank that's working with crypto companies. It had its own 24/7 transaction network called Signet, which was used to work with crypto, which was also a competitor for the FedNow network. And the regulators came in and shut that bank down, even though it wasn't insolvent. It wasn't bankrupt. They came in and shut that bank down, and nobody could explain why. And then they also put that bank's name onto the facility to say, we will back up all of the deposits in Signature Bank, because why? Now that's where this whole thing gets very interesting. They were working with crypto, sure, but I don't think they did it to protect the crypto heads. I think there's a piece of that. There's IP that's in these transaction networks that can be used for the broader financial system. I think the part of the magic trick that we're not seeing, the biggest part, is what Signature Bank had on its books other than crypto and all this other stuff. A lot of its deposits are in commercial real estate. And commercial real estate is not having a great day. You know, crypto, we think like, okay, whatever, it's like a $1 trillion market. That's a drop in the bucket of this whole process. Commercial real estate is a massive, massive part of the world's financial system, okay? These regional banks have huge exposure to commercial real estate, which means they've given massive loans to commercial real estate companies and developers and things. After COVID, nobody's going to work. Commercial real estate is not very useful anymore. So those businesses are not making very much money, which means those businesses are not able to pay their loans, which means those banks that have given those massive loans are about to go bankrupt. And Signature Bank was heavily, heavily exposed to this process. So the big problem that's coming up next is the commercial real estate collapse. So here's some details on that. There's 3 trillion, you know, sometimes it turn into a kindergartner. There's $3 trillion of like exposure into the markets. There's $3 trillion of debt of overdue debt that is coming up in a $20 trillion commercial real estate market just in the US. Okay, that's a $20 trillion market, commercial real estate market, with $3 trillion of debt that is not looking too good right now. And that's $3,000 billion of debt, okay? $162 billion of the debt is due this year. So $162,000 million is owed to somebody, and that's the part people aren't going to be able to pay. And 35 billion is already past due. Okay? The banks are just barely breaking even at this point. So any further shocks to the system means we just fall through a floor and we just have a cascade of insolvencies. When commercial real estate collapses, banks will liquidate assets, which will melt the banks down, okay? Because loans default, the smaller and medium-sized regional banks that have all of these loans out collapse. That means those banks are not lending out into the market. And if they're not lending out, then business slows down, which means more loans collapse. So it's a vicious circle that continues forward, all right? And 27% of that commercial real estate debt is with regional banks. So a third of that debt is with these banks that are overexposed in this capacity. $60 billion of that debt was held with Signature Bank. So I think the Fed came in and saved Signature Bank because they had a massive amount of New York commercial debt, and New York is a financial center that cannot be allowed to go down. Today, traders are betting against the banks because you can check the CMBX BBB tranche, which I don't understand fully what it is, but this is coming from experts, which is a way that you can see traders betting for or against real estate. In this case, it's dropped 30%, which means people are making bets against basically people are betting that this whole thing is going to collapse. And when traders start to make bets that much, it really means something. And office REITs, so office real estate investment trusts, which is just a vehicle to be able to invest into office real estate, have plunged 71% this year. Okay, all of these are like massive red flags that are telling us there is a commercial real estate collapse coming, and that commercial real estate collapse is going to hit the regional banks really hard, which means they collapse. I don't think the Fed is going to just come in and save all of the banks. That's not the plan. They've saved Silicon Valley, they've saved New York, and they've saved a few random pieces of the pie and kept them for themselves. I think they're going to let a lot of the system collapse. Now, what does that look like, right? What happens is a bank, all banks are broke. All banks don't have your money because remember we said you give the money to the bank and the bank lends it out to somebody else. So the bank actually doesn't have the money. When the banks run out of money and we go in and ask for the money, banks go bankrupt. And anybody who's below the $250,000 limit in the US and €100,000 limit in Europe has something called FDIC Insurance, okay? That is insurance saying, if the bank was to collapse, we would insure it and we'd pay you back, right? There's just over $20 trillion of deposits that they need to insure, and they only have 1.6% of the money to insure it, the insurance company. So they literally don't have the money to insure you. But with this activity of the Federal Reserve coming in as a savior and protecting everybody, I think what's going to happen is the banks are going to collapse across the board. Small banks, medium banks are going to collapse. And the FDIC is going to need $20 trillion printed to save the banking system, okay? And this is always the way it goes. They cause the problem, and then they come in with the solution acting like they're the heroes. And people are going to be happy. People are going to say, look, just get me my money back. Get me my numbers on a screen back into my bank account. As you have to print it, schmint it, who cares? It doesn't make a difference. But $20 trillion of money being printed is like almost the entire supply of money that's out there, the dollars out there being printed again. So effectively, inflation goes through the roof, assets, crypto, all of this stuff blows up, and prices go to numbers that just don't even make sense because you just doubled the money supply in a heartbeat. But people will get their dollars back. But I don't think they'll be the same dollars. That's where the trick lies, right? There's dollars, and then there's central bank digital currencies, dollars. So they'll still be dollars, they'll just be digital dollars. And you'll have to hit I agree on some new financial system that is going to have social credits, CBDCs, everything built into that system. It's a much more controlled system based on these new ISO 20022 type systems that we're talking about, hooked up to the FedNow system, right? That money is going to be programmable money, programmed money. So they're going to say, we don't want you to spend it on crypto. We don't want you to spend it on all of these different things. Before that even happens, even today, in America, try getting a large amount of your money out of the US and put it into crypto. The only two banks that in the US, the only two big banks that were working with crypto have now either been taken over or shut down and gone bankrupt. So the walls are being built around the US to stop American citizens from being able to exit the US dollar and go into crypto. This always happens, right? Whenever the old world order collapses, they see that capital is fleeing the country. And this is where you gotta watch Ray Dalio's changing world order talk, because he describes this in there. Whenever the old world order collapses, they stop the flight of capital from that system to the new system. Okay, and that's what's happening now. Banks are being shut down to stop you from doing it. Regulations are being changed to stop you from doing it. By the time this new financial system comes around, they're going to just program the money so you can't do it. Okay, but wait, Sim, hold on. You said they're going to print a lot of money and put it into the system, right? Yes, that's always the only solution. But that means crypto is going to go moon time. I don't think crypto is going to go to the moon. Okay, I think crypto is going to Jupiter. What's the one past Jupiter? It's like Pluto. It's going to Pluto. We're making Pluto planet again. It's going to Pluto. It's going extra solar. It's going to Andromeda galaxy. We're probably going to extra galaxy. It's going. You get my point, right? When you print that much money and put it into assets, a new asset class like crypto goes to numbers that we can't even believe. Okay. So that whole process plays out. What do we do? Problem. What's the solution? Here's some solutions. Now that we know that USDC is effectively backed by the Federal Reserve, or as well as we can know, we can see that it's backed by the Federal Reserve. It's like the de facto private central bank digital currency of the US. I think it's very wise to take the wealth out of the US and transfer it into your own pocket. Okay, it's the safest place I can see right now. Again, if you lose all of your money doing this, that's your fault. This is not financial advice. This is just my opinion. Okay, but moving it into USDC and self-custodying it, I think is the safest place to keep it. If that's something you don't feel like is conducive, right now assets are down. And in this banking collapse period, assets are going to be even lower, I think. In that process, buy assets. Buy real estate is collapsing in some areas. In other areas, it's going up. Depending on your area, real estate is a good bet. These digital assets, crypto, I think they're already at great prices. They're between 80 to 99% discounted. Obviously, do your research, but buying these assets is a fantastic idea, especially during the collapse. Or at least just get your money ready to deploy in this space by turning it into USDC. I think that is by far the safest place to move your money. Now, an interesting thing to remember is a lot of these things are not the same in other countries, right? This is why the Saudis have broken away from the US, China has broken away from the US, Russia, the entire Middle East, India. Many countries are breaking away from the US system because they realize we need to insulate ourselves against this whole collapse that's happening. So you can actually move your wealth to other jurisdictions, other currencies. Multiple sized institutions in multiple jurisdictions is a good bet. A lot of people are putting their money into money market funds. If that's your cup of tea or your latte, or what is this, cappuccino, if that's your cappuccino, then that's your cappuccino. When we're talking about these bank bail-ins where they just take your money from the bank account, did we even talk about it? We'll talk about it. There are laws globally implemented in all G20 countries. They're called the bank bail-in laws. Very interesting laws to read. I know you don't like reading your laws. You probably don't even like your in-laws, but just read these laws, or read a description of these laws. Okay, they're even worse than your in-laws. Honestly, they're like the worst laws. These laws say when banks go bankrupt, they have the right to take the money from your bank account. Look up Cyprus 2013. I'm just a messenger. Don't shoot me. And they did this in Cyprus as a beta test. And the G20 countries have laws saying that they're just going to take the money from your bank account. Right? To protect against those bank bail-ins, you can actually move your money to brokerage accounts. Brokerage accounts are not part of the bank bail-in laws. They have different laws that apply to them. You can, again, move it into USDC. You could move it into assets, digital and physical, because assets are going to explode in this banking crisis and the banking collapse. Banking crisis is one thing, banking collapse is a whole other thing, right? So that's what's coming within the next 2 years. And it's not coincidental that the next 2 years is the implementation of this new financial system. Interesting coincidence. Now, while this is happening in the US, and the US has sued companies like Ripple and is suing Binance and suing just everybody. They're just suing anybody they can see, they're suing when it comes to crypto. The rest of the world is adopting these technologies, okay? Dubai is already accepting Bitcoin and XRP as payments. You can literally walk up to a shop and use XRP to pay. Now, what does Dubai know that the rest of the people aren't telling you? Maybe it's the thing I just said, which is that XRP is going to be part of this new financial system. How is XRP going to be part of this new financial system? Good question, Sim. Really good question. XRP is the neutral bridge reserve asset that sits in between the various central bank digital currencies of the world. Okay, let me explain. I know that kind of sounded like it wasn't English, but in this new system, the US, friends of the US, will probably still use the US dollar as the global reserve currency. The Chinese friends will use the yuan. The Middle East will use mBridge, but all of those are digital. Nobody really wants to transact. China is going to need to trade with the US eventually, but China does not want US to have their financial data by using their global reserve currency. So they need something sitting in between all of these different currencies, a neutral bridge reserve asset, a public good of sorts that allows the transactions to happen. Well, lucky for you, that's exactly what XRP does. XRP is a neutral bridge reserve asset. You can literally convert your dollars into XRP and then XRP into yuan without the yuan and dollar talking. It does it in 3 seconds. It has something called on-demand liquidity, which I'm not going to bore you too much, but that's a massive problem in the banking system right now, where a bunch of money has to sit stagnant for foreign exchange to happen. You don't need any of that with this. And it is external. It is jurisdictionless. It is supranational, like the new system that's going to be. So XRP is something that I know is going to win out in this whole process. And there's even just more confirmations that are coming along that tell us that that's going to happen. Now, the crypto, so you understand that now. The banks are collapsing. Many of the banks are going to go bye-bye. When those regional and smaller banks die, what's going to happen is the really, really big banks, the JP Morgans, HSBCs, Citibank, the biggest banks in the world are going to cannibalize these smaller banks and swallow them up, and the consolidation is going to happen. Consolidation of the power is going to happen to those banks. Now, when you really listen to those banks, they're all singing the same tune. They're saying tokenized securities and tokenized commodities, tokenized assets are the future of the banking system. BlackRock has said it. I think Citibank just came out and said it. Everybody's saying the same thing, and we've been telling you this for a long time. The future of crypto is tokenized securities, tokenized commodities, tokenized wealth, right? That's why we tokenize mines, we tokenize farms, we tokenize commodity supply chains, because those things are actually valuable, right? Because when you print a bunch of money and dump it into the system, what do people do with that money? The people are smart. They know, hey, if you're just printing a bunch of money, it's becoming worthless over, every day. I'm going to go buy physical things with it. I'm going to buy gold with it. I'm going to buy houses with it. I'm going to buy food with it. I'm going to go and buy the actual things that are valuable to us. Those things are going to be tokenized, are already being tokenized. All of these big banks and these biggest players are looking towards that direction and are going to invest in that as soon as the regulations are clear. So the future of crypto is tokenized assets, tokenized real estate, tokenized securities, tokenized commodities, tokenized. But the way they differ from the tokens we have today is they're regulated. They're not some kid from Korea makes up a coin and calls it Luna, let's say, just for example, and then just magically uses an algorithm to create another stable coin, and then all of a sudden everybody's happy to put $60 billion into it and lose all their money. No, that world is ending. Regulations are going to tighten the noose and probably make it very hard for you to enter the space. Just a side effect. But it's going to make it easy and comfortable for the biggest players in the world to enter the space by 2025. Regulations are coming in 2024. By 2025, this whole process plays out in a massive way. This rush of money takes us to the moon. And this rush of money that we're talking about it's not like the Federal Reserve is printing money and putting it into crypto. No. The Federal Reserve is printing money and putting it into the banking system to save the banking system, or other places in the financial system to save the financial system. The smart money is realizing their money is becoming worthless, so they're pushing their money into crypto and tokenized assets and securities and all this stuff. I mean, it's not a coinkydink that these guys are all singing the same tune right now because they're watching their money become worthless. So, if you get ahead of that and play the long game, the 2025 to 2026 game, there is the greatest opportunity in history coming. It is going to require that you act now. Act to protect your wealth. Act to understand these spaces. Act to understand anything that you didn't understand in this talk. Take self-custody of your wealth. Figure out a plan and invest in these future technologies. Now, that's just the tokenized asset side of things. Here's a few other amazing sectors that are going to blow up. Many of these coins that we have today were just good ideas for the last few years, and their adoption is coming now. Your Ethereums, your Polygons. I'm not going to name a lot of them because you'll just blindly go buy them and lose all of your money by mistake. But they're now being implemented. They're being used going forward. So many of those assets, the solid assets, are at bottom barrel prices today, and their implementation they're in the adoption phase where the whole world starts to adopt them. They're great bets. The wave of AI that's coming is going to create a bunch of AI tokens, because AI is based on the processing of the most important commodity in the digital world, which is data. AI takes that data, understands it, digests it, and makes it usable in ways that we can't even imagine. So the future is there's going to be AI, tokenized AIs. And if you're just getting your head around AI, let's go talk about tokenized AIs. Okay, I'll do a whole different talk about it. My point is, there's going to be tokenized AIs. There's tokenized real estate, tokenized commodities, tokenized mines and farms, and tokenized securities that are coming. There's a bunch of blockchains that are running right now that are fantastic. There's a bunch of projects running on them that are fantastic. And right now we have like 20,000-ish projects that are running. I mean, there are millions and millions and millions of projects that are going to come out later on. You know, it's like saying today we have 20,000 apps in the app ecosystem. Well, remember when there were 20,000 apps in the digital world and the app world? Imagine you entered then and bought the right apps. Now there's millions, tens of millions of apps. Same thing's going to happen with this decentralized world. So hopefully that made sense. If you're going to do something about it, definitely plan it out. It's coming within the next 2 years. Get yourself into the right country. Get yourself into the right banks. Get yourself into the right assets. Get yourself into the right mindset. Get yourself into the right heart set. Get yourself right into the right communities, around the right people. And let's see how this thing goes. It's going to be a fun old time. I'll see you next time.